The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is 11/11/13 day, Veterans Day, and thank you to all the vets. There's no question about it. About as integral and as important sector and unit that we've ever had. Thank you. That's what we have to say, is thank you. The Dow is up 13, S&P is unch, and the composite index is down 12 at 39.06. The Dow just missed by 6 or 7 points, making a new all-time high. Gold is down about 3 at 12.82. Silver's it's up 3 cents at 21.35. High-grade copper is still down in the 326 area. Crude oil stuck in 95. Bonds are down 8/32. A lousy day on Friday. Dollar's down as well, 21 ticks, and you've got the euro up just a little bit. Thank you, Steve, for a great 2 hours. Lead in here. We always do that. This is Monday through Friday, every market day. We're all here. And 877-927-6648 is the number to call. Missed you on Friday, but I was very busy doing the 7 hours of talking, 7.5 hours of talking, nonstop. And I really enjoyed it. I had a very nice webinar. It's just something that I love doing. And all those folks that were there and those that are going to be doing the archives, which hopefully will be done today. I know Mike puts an incredible amount of work into it, and thank you, Mike, for everything you did. Thank you, TFNN, for putting it all together. Really appreciate it. And the most significant is that questions. You have a question, as I have with one of the attendees talking about the MACD, trying to set it up on her service. It's a standard MACD. All you need to know that it's exponential moving averages. But if you don't, I'll be able to tell if you give me the number. But you're using 12, 26, and 9. Those are the numbers that would be there. Those are pretty standard. And they know, my subscribers know as well as the attendees. You just email me right away. You got a question. I've already answered a whole bunch of questions over the weekend. And you'll get used to the service. Just remember, go slowly as you start off. You don't have to go full tilt and say, oh, yes, has some great calls now. I'm going to buy 7,000 or whatever it is. Just slowly but surely get to know what I said today is get to know my strengths and my weaknesses, because that's going to help you a lot. And we all have weaknesses. We have to admit it. It's just the way it is. We all have strengths, and we've also got to admit that we've got strengths. So now let's get back to the market here. A couple of things happened. The E-minis made this high-level consolidation. The U pattern looked really ugly on Thursday. MACD turned down, stochastic went to under 80%. Terrible candle. You go a little lower on Friday, and the next thing you know, whoosh to the upside. In the E-minis, it did not take out, none of the indexes took out their highs from Thursday. Not the point. The point is that it was a stupendous move to the upside. I think most of us would be quite honest if we said that we didn't anticipate that kind of strength. Yes, a bounce you'd expect a bounce, especially what I do is I always look at the last half hour or hour of trading, whereby on Friday you got that extra push to the upside. Thursday you got that extra push to the downside. And normally, unless it's really bad news or incredibly good news to follow the move that you just had, to continue that direction, you would get at least a give back. I call it a give back of the excessivity of the previous day. That's that last hour of so I expected on Friday maybe a 40 to 50 point pop up, even 60 point. That was huge. That was huge. So let's just do a couple of things. I had a bunch of questions. I want to deal with them right away. We've got a question in the den as well from Gold 25. He asked about the crude oil. CLF, I'm going to better take 14 and not 13 because 13 is finished. Yeah, this is very interesting. I only had a moment over the weekend to look at certain charts, and I spent quite a lot of time on others. Most importantly, I'll go through this a little later on. I didn't anticipate it during the all-day webinar on Friday, but that pattern that I talk about almost every year, we get at least one of them, maybe every other year. Haven't had one for a while. It's called the Chapman Wave Stork Leg Formation. I'll talk about that sometime over the coming few days. I need a little more evidence to say that that's really going to work out. But the crude oil right now made a peak E in the weekly chart. Excuse me. There is a cup formation that formed, taking you to what I call a gray C. Now, my webinar, I spent time on this. I'll do it again right now. From the previous peak of peak F, I think I'm, Goldie, if you don't mind, I'm just going to go to the continuous contract for now. Whoops, the continuous contract, because although it gets smoothed out, etc., you'll be surprised how well the two of them match. So now I'm going to, see, I wanted this because the pattern that I spent some time on Friday, and I've spent some time on showing my subscribers that I'm looking at in gold, is the same thing where you get the arch formation. You get this H formation, called the dreaded H, let's call it the H formation, comes straight down, trying to bounce, and then a successful test way above the previous low, and that low was the low of February of 2009. It goes to a peak E, it spikes up to an F, it pulls back, it goes to a B minus. There's the same thing, repeated patterns over and over. We saw this. I stopped counting after a while the number of H patterns that we were looking at on Friday. And now the H goes to some kind of an M pattern. And that says that looking out, crude oil is having a really difficult time, number one. If you go to the weekly chart, you will see that there's something else that's happening here. It makes a double cup formation at the bottom, going to peak D first and then pulls back, then goes to C minus. Then it starts a brand new move. And that brand new move goes to a D and then an E in this double cup formation, breaks above the 200-period moving average in the weekly chart. That's that line there. Then where does it go? It goes to a peak E. The peak E is a very sharp move down, trough A, trough B being formed, and there's no new low this week. Now look at this doji candle on the weekly. If crude oil, this is the continuous contract, closes above 95.40, preferably 96.10 to break away decisively from this doji candle with an open and close round about 94.60. That'll say finally you got a bounce that can go to the 98 area, perhaps 101, but don't be surprised if there's another H formation forming. So that says the downside will be very important based on the daily chart. So here we go. Now we're going to go to the one that you want to look at, which is the F. That is the, I think it's that January or February. That is the January crude oil price. Not 89.61 from January of 2000. Okay, I'm going to do this a lot, I know. F 14, not 13. Let's go. C L F 14. There you are. Trading at 95.42. Isn't that interesting? Are we trading at the same price as a year ago? Yes. Isn't that fascinating? Having been down to 85 and up to 100, which year? 2013. Yeah. Isn't that interesting? Having been all the way up to 107. It's just one of those things I wouldn't have thought about. It's like bonds. Bonds, the yields are trading right now as they have been for the last 3 or 4 years, right in the middle there. So, this is what I'm looking at. Now, Goldie, if you're looking to get in, I would do this. Boy, The pattern that's forming is a good but not a great one. I know. It's an okay one, but not a great one yet. I need to see that MACD finally close decisively the green line over the red line. That's number one. Number two, I need to see the stochastic not in the 18% area, not even in the 22, but in the 31% area. Then I'd say, great, you're not going to retest the 92.46 level in the 200-period moving average in the weekly chart. So, is there a trade? Let me go to the USO because I actually like that very much. I know that some people don't put them together, but I do. There's a trend line that I've been watching real closely, which came in exactly. Oh, it took it out by a fraction on last Tuesday or so. Was it the 5th? The 5th was, in fact, Tuesday. I think, Tuesday. So that at 34.02, was that right? 33.55. So at 33.55, you've got a moving up. The MACD now in this particular USO chart is much better. Oh, okay, I've got it. Just bought the USO. Okay, great. So you bought the USO 34.26, let's just say. I'm going to recommend two things. One is, I don't think you use the 120, maybe use the 60-minute chart. The 60-minute chart has a high of 34.13. It's trading right now at 34.28. I want to see it, 34.37. 34.13 was the low of that bar. 34.37. I want to see this thing, the USO, United States Oil Fund LP, push right into the gap of the 1st of November, 35.45. It doesn't have to do that today. I would love to see it this afternoon, but it needs to do it tomorrow, and it cannot, under any circumstances, break 34 support, 33.97 support. If it does that, it's just that H pattern that goes to an M pattern. I think you've got a nice entry point in a risk-reward basis. So here's my recommendation. You hold the trade. I would keep that. I don't know what you did in terms of, I would personally have started a small position. I would add to that position if it hits 34.59 to 34.65 and then pulls back just a hair, and immediately within 3 bars of the 60-minute chart, it doesn't even want to hang around there. It wants immediately to go to the high 34.70s or something like that. To me, that'll show finally there's strength enough to break that 9-period moving average resistance. We looked at this on Friday. How that resistance is it's a repellent line. So I want you to begin holding above that 9-period moving average as a support line. So nice entry point. Keep the stop fairly tight, as I said, make it a 37 cents stop, and then I would add to it only if it breaks above it. Thanks, good question. And
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. So we went from the USO, which is the United States Oil Fund, which is acting nicely, not great right now, but if it just moves up even another 50 cents, that'll be the first sign that the technicals are confirming the rally. If they move up in commensurate with the price of the USO itself. Now we've got something else. Couple of questions here. One, let's just do it right now. The dollar. The dollar's at peak B. The MACD is very strong. The stochastic is at 81%. That's good, not great, but good. It deserves an up arrow, which I thought I put in, which I didn't put in. It should have been, it's underneath there. Okay, the up arrow. And that says that the dollar should go to at least a C and then a D. It should. It doesn't know about the Chapman wave. It's its own boss. But that's what I'm thinking. And if you look at it in the context of this downtrend, resistance line, spent some time on that as well the other day. This is what I call the inside track repellent sell zone. If it breaks above, look how it held inside there. Look how it held the 9-period exponential moving average. Just, I love all these different techniques when they come together. MACD's good, stochastics at 81.98. So it says that the dollar has a chance to go towards that line right there. And that line right there is at, what is it? It's the moving average line. The 200-period moving average. No, that's wrong. That's the 200-period moving average. Oh, That's right. I added it. It was a request. I added the smooth moving average because one of my subscribers came up with this observation, something I'd seen before. I never really used it because I have so many other tools, but I think it's just worth putting there. That sometimes it acts as a little ping pong area where the ball's going to bounce between the high and the low, the 200-period exponential moving average and the 200-period smooth moving average. I'm looking at that, and that would mean that the dollar would bounce between 81.25 and 81.81. It's funny that I was looking at that because I was looking at those dojis going all the way back to 81.74, 81.69 from early September, and I'm thinking that would be my line of attack. It has to break decisively above those dojis and the peak B that was formed on Friday at 81.48, 81.48. And that would say, okay, if it does it today, that's very positive. If it does it tomorrow, that's good. Not as positive because that'll start leg C. If it does it today, it extends leg B. So the dollar's acting very well. When you put it together with the Euro, EUR, USD, I'm doing the combination of the currencies, that's very different because when you put them together, what we're looking at is that the declining mode from the doji, I love these dojis, the doji high, back on week of the 25th of October, 1.38315. I love it, all those numbers. You've come down just in a trough A and a trough B. That says that if you find tremendous support after two legs down, and you can break above the 9-period exponential moving average, you could have a pretty darn good counter-trend rally. But the stochastic is flat at 18%, and it's not going anywhere. And the MACD is still very negative. So I'm suspecting that the euro is being repelled from that cup formation in the weekly. But more importantly, remember the dollar was breaking out? So the euro is stuck in the monthly, that inside track declining, those two declining trend lines, and cannot get out of its own way. So that says to me the euro needs a little more time, and we'll see. Because if the euro breaks to the 1.3273 on the 200-period exponential moving average, then all of a sudden you're looking at the weekly as well that is starting to show signs of deterioration technically. So my opinion right now is that the dollar is doing a lot better and will continue to do better than the euro. The other one was, let's see, what I look at, and bonds. So the TLT, a lot of questions on bonds over the weekend. That pattern, that H that goes to, I'm going to call this for now, just one big H pattern in the weekly chart. And, I hate to say it, looks like it's failing. And, I hate to say it, but if you go to this particular chart right here, I meant to send it out to my subscribers this morning. Usually on a Monday, I give the weekly chart from the previous week, from Friday's close, of the triple yield. I call it the triple yield bond chart. Now, what's so fascinating about this, look, you had that cluster formation at 54.08 back in June of 2007. And then it starts to expand, and it goes all the way down, 11.85 in the 5-year, 25.19 December of 08 in the 10-year, and the 25.19 in the 30-year. So I'll be back straight off this with Michael in Boca Raton, and we will look at some stocks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Basil Chapman, Tiger Technicians Hour, and it's my pleasure right now to ask Michael in Boca Raton, Florida. Hi, Michael. How are you?
I'm doing fine. How are you?
Very well, thank you.
I'm a new member of your newsletter. And
great.
I have questions to ask about what is the difference between a full position, a small position, and a very small position? Is it like, could I go by the amount of money I put in? Like, would it be like 50% less than a full position or 25% less?
I like to think of in my Trader's Corner, I like to think of it as a group, as a unit, as if it's a portfolio. And my thinking always is that I have no idea what people have and what they want to put in. I don't know what their positions are. I don't know whether they own a house and that they have mutual funds and this is just a separate thing altogether for them to have. I don't know whether this is the prime thing that they have. I have no idea. I have people that go off to work early in the morning and then they come back and they aren't aware at all of what's happening in the stock market. There are some people that are watching minute by minute, either fund managers or folks that trade all day. So my thinking always is that in my particular newsletter, when I say a small position, it means that within the concept of having a certain amount of money, this is a position that you want to be able to get into, and you're going to be able to have enough money left over to add to it and then get into other positions. When I say a half position or a full position, most of the time I'm saying that I have a lot more confidence in the technical aspect, and that if we get into a larger position, like a half position or a full position, that's where I'm going to probably have the opportunity to take off some as it either rises or it pulls back. So
okay, I understand.
So
do you ever go more than a full position?
I occasionally I'll say a full position, and that when I say that, it's probably going to be an index when I've got all my little ducks lined up and I'm feeling very confident that that particular index is going to move, and it's going to move enough that if it makes a decent move, I can say, okay, now take some of it off, keep your half position or whatever it is, and we will add a trading position. That's different to when we got a starter position that I might add to later. Sometimes I don't even add. The other day we had 11 positions. I never have 11 positions. And I said, be careful, because when I have more than 7, we're close to some kind of a reversal. Of course, Thursday we certainly got that reversal. So, and not only that, I treat my newsletter as if I was a second person looking at it. As I spoke earlier about, I said, you've got to understand each newsletter writer's strengths and weaknesses. And I find that that sometimes I'm following the stock market so closely that all of a sudden, as we did the other day, we got those 11 positions. It turns out they were short and they were long, and in fact, most of them worked out very well. That's highly unusual. So I have a very difficult time. Say, like Steve has a very nice program, the way he works it out. I'm not that comfortable with it for my work, because in the manner in which we go about going in.
Right. Good. I understand. And then I have a position in a stock, and I'd like to have what you think of it. But I have to leave. Could you just do it, and I'll be off the phone, and when I come back, I'll be able to archive. Listen to it.
Oh, okay, great.
Okay?
So it's NGL Energy Partners LP?
Yes, that's it.
Okay, and have you had it for a little while?
I've had it for about a year and 3/4.
Great. Okay, that's what I wanted to know. That'll make it a lot easier.
Adding positions to it. I ended up with 3 positions in it.
It looks very good, so I'll talk about that. Okay, thank you so much, and thank you so much for becoming a subscriber. So we've got Michael in Boca Raton in Florida. We're looking at NGL. NGL is NGL Energy Partners LP. Now, what's really fascinating about this is I don't remember ever seeing it before. In fact, I thought it was a natural gas something or other, but it's in energy, and I almost forgot to. I'm going to do it right now. I'd like to know exactly what NGL is involved in. NGL Partners, and I'll tell you in a minute. I think that, let's see, there are a Delaware-based Master Limited partnership. Come on, tell me what you do. Partnership amended LP investing. I've got every single one of these, but nobody gives me the headline of disposal and hauling business of oil field water lines. Oh, they acquired it. Oh, what an interesting company. Supply is an industry leader in supply and distribution of liquid propane gas. So it was gas, okay, as well as butane, propylene, butylene, and crude oil across North America. Excellent. Good. I'm making a note of this one. Nothing yet, but I'm just making a note of it. So NGL is trading at 32.01. Now, I think that I should be calling Michael. You shouldn't be off the phone. I should be calling you to ask you how you got into it, because you've added to it. You've done everything perfectly. I don't want to touch your trading plan. I am just going to tell you what I'm looking at in the stock. When I did my analysis based on the Chapman wave, from the most important lowest low bar that I can go to on the week of the 28th of December of 2012 at 21.18, I wanted to look at the volume in this as well. I had a feeling, this is a very light volume. So this is a stock that you want to do it. This is not like for a fund manager. This is really for individuals. This is perfect for individuals. Not that lower price, not that lower volume, but low enough to make mutual fund ownership hazardous, because they have to go in every day and only buy a certain amount to build up a position. This is a stock that, to me, once it gets to If it had to break out to the 34s, I think that ownership by mutual funds will start to increase. Now, this is what I'm looking at. I had no other way to count it because it does have these crazy spikes every once in a while, as it did back in the week of the 1st of February 2013 to 28.63. They ended up closing at 24.09. It's walked the 9-period moving average. It's actually looking very good. I can't count it any other way because after F comes G. After G, you can't get an H. There is no H in the Chapman wave. I have to call this a buy mode in this particular sector. And it's the, how can I just succinctly put it? It's in the, it's a full-service midstream provider, focuses on water services, energy, NGL, energy partners, crude oil logistics. Whatever it is, I think they're in a really good area right now. That's the way I'm looking at it, because that's what the prices say. I love the stock. If you have positions, I'm going to suggest it's a 32 right now. 33.90 is 2 points away. That's a lot of points. 32.90, yeah, it's almost 2 points. I'm going to make the suggestion, and you don't have to do it yet. If it pulls back underneath 30.67, between 30.67 and 30.10, let's call it 30. If it slips in this particular pattern, if it slips under 30, I'm going to recommend you take just a little bit off your most recent purchase, take profits, and hold on. I don't think it's going to do it from the way it's acting right now, because in the daily chart, it's made an E, but it's held really well, and it's got this double cup formation, which says it's like a rectangle formation. I've been to the bottom. I should go in a Chapman wave inside buy mode to at least D. This is what I'm calling leg E, but this could, if this breaks above 32.50 by even 1 penny, I don't know if I want to call it F. I think I'm going to call it F/B, because it looks to me like it could start a brand new buy mode and move towards the gap and the high of 33.90. So those are the two scenarios. One is only if it pulls back a little bit, take something off. I like what it's doing right now, and I'm going to suggest that you hold these positions. 32.51 starts a move that has a really good chance of going into that candle of the 19th of September. 33.90 to 32.91 is the range. That's what I'd be looking for. And I'm putting it on my list as a stock to watch because I think that this is fabulous action. There's a rising trend, a rising wedge formation that says if it takes out in the next 2 weeks, if it goes to 33.70, there's just a really good chance it's going to start to break above it and go to that 33.91 area for leg C in the weekly chart. Hey, bravo! I should be calling you and saying, Michael, what should I look at next? Let's go to Vic in Detroit, Michigan. Hi, how are you, Vic?
I'm good. How are you, Basil?
I'm very well, thank you.
Good. Say, I've been doing a lot of reading over the weekend, and I have a small, put position on the SPYs right now, but I haven't heard. I was listening or waiting to hear either you or Steve address this morning the fact that the Fed pumped $5 billion in on Friday, which also caused approximately 30% of the shares that went up on the SPY to be short covering, and I've seen the Dow go up, hit. I'm going to say a new high. You want to call it a quasi new high. The SPY do almost the same thing. Not non-confirmation with the NYSE, non-confirmation with the Russell.
Right.
So is it rotation, or are you making something else out of it?
No, I think, it's funny that you mentioned the Fed. I had a feeling when I finished my, we looked at it during the webinar, but we were busy. We were looking, in fact, we looked at the E-minis on a 2-minute chart, which had this V-shaped formation, and we kept talking about it, how it went to a peak D and then it recycled. But most importantly, this morning, I said to myself, you know what? Friday's action felt exactly as if Robert Rubin was at the helm. It
right.
just had the sense that Thursday was ugly and that they were afraid that there'd be a negative connotation of the jobs report on Friday. They did not, meaning the Fed, because they have the power to do this, and that the people who do the numbers said, you know what? I think we need to get some pumping going here. I just looked everything about it. And then once, I always talk about this on options expiration day. It happens. There are certain days that it happens where there's a very big news event, jobs event. We say they, we don't always know who they is. In this case, we do know who they is. But in options expiration, when all of a sudden on a options Friday, the market is down sharply, and then out of the blue, it starts to move like a rocket ship to the upside, or it's the other way around. It's up, and then all of a sudden moves down. The options players, I call it nudging. What happens is they don't go there saying, oh, I'm going to buy all the puts, I'm going to buy all the calls. They wait and wait, and then as soon as... I always talk about this in context of when I used to conduct my chamber groups and the small orchestra that I used to conduct as a professional musician. You don't have to say a word because people are all trained so well that just moving your baton or your hand or just a gesture, and everybody knows immediately that you want to accelerate, you want to slow down, or you want louder, or you want softer. You don't need a wink. You need nothing. You just need the movement itself to start. And that's what happens more on options expiration day. But when it occurs, as it did on Friday, and then you get the short squeeze, and then you get the squeeze on the squeeze, everything you're talking about just made sense. So that says to me, on the one hand, you can say, hey, wait a minute, that's a non-confirmation because there was an artificial, price is the arbiter of direction. And in this particular instance, the price went almost to, in the Dow's case, the SPY needs to go just 1 penny. I'm actually looking for that. 1 penny above 177.64 to give me leg D. The Q, it doesn't have to do that, but that's kind of what I'm looking for. The QQQ series, I don't know if it's going to have the strength to go to a real D instead of the peak C1, C2 that I mentioned to in the den to Peaky over there, who asked about it, above 83.49 to 83.50 to give us leg D. But the Dow Diamonds missed it today. 157.80 is the number. Today's high was 157.73. It missed it by 8 cents. And I think we will get that 8 cents. And when I'm looking at the different things, for instance, I like the action in the XLF. I like the action in the that's the S&P financials. They needed to break above, and I didn't expect them to do it on Friday so strongly, above a channel, not a channel, a trend line. Big difference between a channel and a trend line. This is the trend line, that falling X formation, and move higher. And they're doing it, and there's a cup and a kind of a cup and ladle pattern forming in the weekly chart. That can break down, but it says to me that if you have this rotational strength, if you're looking at the XL, will I find it now? I think it's the SLX. Yeah, SLX, which is the steel, which went to a peak D, but it's holding well, and it looks very much like it wants to test at 49.21. The SLX at 49.21 looks like it wants to test 50.45. So in answer to your question, I believe that there was a push to the upside because of the Fed, and that elicited buying and covering and all sorts of things that occurred, but the price is held. And today was the test. The morning was the test. So it says to me there could be further buying to come. Hope that answers your question.
Yeah. All right, terrific. Hey.
Thank you.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, we are back. Basil Chapman, Talking Conditions Hour. Dow's up 18, the S&P is under, and we're going to go to Ben in Tallahassee. Hi Ben, how are you?
Great, Basil. How you doing?
Very well, thank you.
Good. I'm just going to throw a quick comment and then my question. I gotta go here, but I really appreciate everything you guys do. And it's really sad that you put all that effort in, and then you get this. What I just heard you guys say is an injection from the government. It just really skews everything. So it's unfortunate. So do you see the DIA now as an alternative A, or are you still sticking with your leg E? I think we're on.
We're at peak E. If there's an extension above 157.80 in the Dow Diamonds, I'm calling that F at this particular point, and it'll be an F/B if the MACD is still holding really well and the stochastic pushes to about 81.50 or maybe 82. Right now it's at 80.91. I'll tell you why. The pattern I'm showing right here is much clearer on the Dow Diamonds than it is actually on the Dow itself, although they're really close. I've got a pattern that says, it's a pattern I'm going to talk about quite a bit. It's called the Chapman Wave Stalk Leg Formation. There's a series of peaks that go higher, but it's really like one leg up. And as a stalk stands on one leg, and then it's got this rather large oval body on this thin little leg, so what happens is you get a price movement just exactly within an oval formation. It's not a rectangle, it's an oval. And then you get yourself a peak C or a D, and then there's one move that breaks above it, and that's what I call the neck. In fact, we've begun the neck right now in the weekly chart because it went above the 157.06. Right. So I don't want to. I follow my own chart patterns, and this one is a Chapman wave stalk leg formation. And what it says is, in the shorter term, that means I'm looking at the weekly charts. The shorter term could be a week or two. It can go higher. And then at some point, it pulls back. It makes the head of the stalk. You've got the long, thin neck. Then you've got the head. Then it could turn around by making a little consolidation at the top. Or it just starts immediately down. It makes the beak. And that beak, so in other words, shorter term, that particular pattern could be positive. But then you get a sell-off. And that sell-off goes into the body. That would be into the body of the weekly with 154, the 154's area, 50,400, as being really important support. It can go below the body. It could stop within the body. But it turns out to be a very positive. It looks very negative. And then out of the blue, it turns out to be positive for a spike to the upside. That's got nothing to do with whether it's going to go to new highs, just that it goes right back into the body. So shorter term.
So the chances of the negativity this week are getting slimmer.
They are.
I think is what I'm. Yeah, that's really unfortunate.
Well, it's unfortunate if you have puts. It's unfortunate, but
yeah, I know.
I would just say to you, look, we haven't gone above 157.80.
Right.
But if it closes above 157.80, you've got to protect yourself and don't hang on to any short positions that are index related right now.
Okay.
But
thanks a lot. Yep.
So I hope that helps you. Thanks so much for calling. I appreciate that, Ben Tallahassee. Now, let's just sum this up because we've got Larry Pesavento coming on. Should be a wonderful show, as always, with Larry. Let's go to the Dow Diamonds again. No, let's just go to the Dow itself. D-I-N-D-U, I-N-D-U. The Dow is at 50,797 was the high on Thursday before it turned around sharply. The high today so far is 50,791.45. It's missing it by 6 or 7 points. If the Dow breaks above, if it closes today in the 15,800s, that's raising the base, number one. You need to see by Wednesday or Thursday a break of the 15,600 to 15,550 area. That'll be negative. So that's my stance right now. And Larry will be right on with Trade What You See. And my service is the opening call. Check it out from page of TFNN. Thanks for being here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.